This is my exact process that I have to prepare for each trading week. I do prepare every Sunday night during the pre-market hours. I will re-look at this because pre-market hours will move and sometimes price will drastically go higher or lower. And that could also change the outlook of my bias for that ticker or just where price is at. So the first thing I like to go through is I like to look at SPY. SPY is the overall understanding of how the overall market is moving. So this is always the first thing I like to look at. And then from here on out, I kind of go through to see, does QQQ move the same way? And then I go through the other stocks. Now, in this current market condition, I am more, I'm seeing that the setups are kind of better on the stocks itself. What I've been seeing on SPY is that it's a little more choppy and I'm not seeing the setups that I want. So I do look at this, but it's not something I usually trade every day. But I still want to see, is price bullish, is it bearish, or is it choppy? Those are the three things that are going to tell you where price is headed that day or that week, is if it is in one of those three categories. So here we have the 1 hour time frame. This is the time frame I like to use to really just get me a bigger understanding of where price is at. This is my favorite time frame, and this is the first thing I will look at. This kind of gives me the green light as to whether I even want to chart a stock, because if you're looking at this 1 hour time frame and you see that, hey, price is not really moving really clean, it's been so weak, it's not really showing any directional movement, so then you don't need to do a huge top-down analysis. And then you realize later on that, hey, this is not the ticker I ideally want to even chart, because I don't even see that price is in the ideal spot that I want. Always look at the bigger time frame to just give you an understanding. You just want to get an overall understanding of the bigger time frame movement. What we can see is for SPY, it is currently at 597.44. So the overall high of all time is around here. We're kind of coming up to it again. We did have a really deep sell-off earlier this year, and then of course now it's back in green, so we did kind of push back higher in this trend. And so where it's at now, this may look a little confusing. It's like, as a beginner, or like if you're not really too familiar with how to read price action, it can be really overwhelming as to where is it going based on this. What you want to do is just get a really you want to kind of zoom in closer to price, because the further you're out, you may not see really intricate details as to did price break and retest a certain area, is it breaking a support resistance. You want to zoom into this area. Knowing that price has that all-time high area, that is a support resistance area. We're not really close to it just yet, so it's not too significant of an area to watch for. This is going to be an area where price may likely reject from, or we'll get a breakout and a retest to go higher. But since it's much lower, we kind of just need to focus on this whole area here. I want to draw my support resistances. That's kind of like the first thing I like to do when I'm charting any kind of important level, is to look at the weekly chart just to see, hey, is there a really strong support resistance? And then from then on out, I know that's an area to watch for where price could potentially bounce from again. As you can see here, you see a lot of different wicks, different candlesticks. When it starts to get when the current candlestick is pretty close to the other candlesticks, it makes drawing support resistances kind of confusing, because there could be a ton of different ones. Because of that, because we're kind of on this time frame, to me it just seems that I'm just going to focus more on this area, because whatever kind of closer support resistances are formed in more recent times, those are going to be the stronger zones. If you draw something from all the way here, maybe it comes down here, but if you're seeing current price not even respecting it, then there's really no point in drawing it, because what we want to do is draw something where it actually matters. So because of that, a lot of stuff would be drawn, too many lines. I'm going to focus on this area right here. So if we kind of just zoom in to these candlesticks, I just want to draw the bigger zones. So I see that, hey, this area right there is an area of a lot of rejections based on the wicks. I just marked that with a blue zone. Other areas, I don't really see anything else. So maybe one down here, kind of far away from price, so not really relevant. So really just focusing on more current movements. Then I go to the daily chart. I want to see, is there a gap? Is there any candlestick pattern? Right now, don't see anything obvious, so we can go back to the 1 hour time frame. So based on this movement, now we zoom in into the more current price. So this is the past 2 months of movement. Since price has risen to this area, that's where we're going to focus on. Now, based on price, I did mention that SPY is a little choppier than I would like. So based on this movement, this is kind of where you have to kind of make that decision. Is this something you kind of want to go forward with charting if you're actually going to trade it? But for this purpose itself, I'm kind of looking at this just to give me an understanding of the market condition. So we can see that price is at support here. It kind of bounced in this area. We're not getting a lot of good price action. You can just see that this whole area had a fake out, price came down here, but then broke through, pushed back higher, came down here, another fake out. This kind of tells us that this market is weak. If price is not respecting our levels, then it's a little harder to trade, because if you're expecting price to respect another level that you draw, what you may end up getting is a lot of fake outs. So that's something to note, and one of the reasons why I haven't really been looking at SPY, because it's not respecting levels. So the probabilities of my setups aren't going to be that great, because price may end up just doing something random that I did not expect. But just to understand where price is at, we have a high of this like bigger area, a high, a lower high, and then another lower high. Sometimes it's also good to just circle it to get a better understanding of the direction of price, or just to read the chart better. This is something where this is all for you to understand. So you can draw whatever you want in your chart, just to give you a better understanding of where price is going. What we can see here is that price was more recently bearish based on the market structure here. This is important to note how to read market structure, because that's also going to tell you where the trend is headed. Now we have price bouncing from this area here from Friday. So this was like Friday's low area. Price bounced and we can see a higher low. So if price ends up pushing higher during the pre-market and even the market open on Monday, then that could confirm to us that maybe price is trending higher after coming down to support. So that could be a trend change. That is sometimes what you get when you see like a bigger support resistance area. If you start to see market structure change away from it, that's like a lot of confluence to show us that, hey, the trend could be changing. And then from there, during your day trades, during your scalps, then you can kind of see, hey, is there a bullish entry? It aligns with a bigger time frame movement. I want to trade calls, and that would be a higher probability setup than me just trading puts when the trend is maybe changing. So here, what I would kind of look at this as is that, hey, if pre-market goes higher, if price opens up higher than this low, then I would just look at trading calls only. That would be the higher probability setup. Of course, price may always make a lower high here and then continue downward. And this area could just give you a lot of weird market structure. So that's also something to note. There could always be an area where, does it look like it's going down? Maybe it looks like it's going up. Or maybe it could just be an area where price is starting to look choppy. And then you kind of get weird movements. Price is not having a follow through. A lot of other lower probability setups. So you just want to like be aware of that ahead of time, so you're not like blindsided by some kind of movement that you weren't expecting. So based on this movement, I would be more bullish bias. What I would want to see is that, hey, if we're seeing early signs of bullish structure here and it's at support and rejecting higher, for the best confirmation is to see, hey, if we have some kind of pre-market high there, so like however we draw that, depending on the movement, maybe pre-market high is right there based on the smaller time frame. If price ends up pushing above pre-market high, to me that would be confirmation that I want to take calls above that level, because it's showing that these two are lows here. However, maybe that doesn't happen. Maybe price wants to break this low. If we get a break of this low, we could still be very bearish and continue going down. We could even break this support. So then for me, I would see that, hey, is price going to break this low? If it is breaking this low, it would show a break in a swing low, and likely price could still go bearish, since it has been showing us still a lot of bearish market structure. So then the bias after that would be, hey, does price break this previous Friday low? So like maybe a red solid line. If it breaks below that low, I would be bearish. I would only take puts. So like that's how I kind of know on a certain day what is my bias on a certain ticker. It's by looking at what is the bigger time frame, and then does it have to break a certain level? Maybe it's a pre-market level, maybe it's a previous day level. And then if it breaks that level, would I be bullish or would I be bearish? And that would be like based on the arrows, and I keep those arrows there when I'm day trading to tell me, hey, if I'm trading or if I'm looking at 5 different tickers, it's a much easier guide for me to know if I'm switching between the different tickers. I want to see that, hey, if I'm on SPY, where am I trading to? All right, based on this, analysis, when I'm on a smaller time frame, all I have to do is wait for the setups to happen below that level, because I leave that arrow there, price is down there. Now I just look for the setup that I want. And then that's a whole other thing where you kind of go into, what is the strategy? What actual setup are you looking for? What are the candlestick movements that you want? But this is basically what I have to do prior to the market actually moving. I need to be prepared as to which levels need to break, where does price need to be, and then what is my bias going to be in that area. That's what allows my trades to be higher probability, because I've done the preparation of where the trend is headed in the bigger understanding. So all I'm doing is being patient for the setup that I actually want in the direction that I want. Because if you don't even know this overall understanding, then if price opens and maybe price is up here, you see a nice movement, it looks bearish, but then it doesn't align with the bigger time frame. Maybe it looks like a bearish entry, but that entry is like 5 minutes. After that, you enter, price ends up trending and changes trend, and you don't know why. Maybe it's because you don't have that bigger time frame alignment. So all these things, it's always important to get the understanding from the bigger time frame. That way, hey, there's a bigger level to watch for. This area is maybe an area I want to stay out of. It's a choppy area. Maybe I wait for price to break certain levels and then I take a trade. So that's why I always emphasize understanding this 1 hour time frame, preparing here. That way, hey, on this ticker, I know I'm going to trade this ticker on this day. I know that I want a certain level break. I know that I only want to take calls here or puts here, or maybe I don't even want to take SPY. Maybe I don't like the overall movement. I'm just going to stay out and trade the other tickers, which I have here. So it's just like this process that I go through. I go through each ticker to basically do this like analysis. Where are the levels? What's the structure? Do we have certain levels we need to watch for? Where could price head in? Do I need certain level breaks to enter for trades? And that's basically the process of preparing for the week. We go through each ticker. QQQ is very similar to SPY. It moves really similarly. I would say, just based on like my experience, I don't really like the movement on QQQ. It has like not as nice movement that I've seen recently. So I usually, if I'm trading either one, I would rather trade SPY just based on experience and based on the setups that I'm trying to find. So usually based on this, you can see like really weak movements. It's just been choppy. The whole market is honestly really choppy. So it's like small days here and there, you may get a better move, but a lot of the days what we're seeing is that you think price is going higher. No, it's not. It's going down. The trend is changing. So we kind of have to adapt to this market, which is why I say like every day you want to review each day. Looking at QQQ, this is something where 1 hour time frame, I'm determining, do I even want to put time into doing a whole analysis? Do I want to take time to chart it? If it doesn't look that great, or I'm not someone who wants to trade this ticker at this point in time, I will skip over it. So then we go to the next ticker. The next one, Amazon. So like, it's kind of hard to read the market structure. So if it's kind of more difficult for you to read where price is going, I would just say, look at the stronger levels. Stronger levels like support resistances, previous day levels are going to give you a better guide as to where you should trade on that day. Based on that, because we get a lot of fake outs of certain levels, a lot of like weird movements, I would kind of rely, hey, is price moving away from a certain key level? And from there, if there's strength away, maybe you'll see a setup away from that level, which gives you a higher probability than just taking a straight up breakout trade where price will fake out usually. If we look overall, based on this movement, all-time high is there, so it's not really that close. Based on this movement, it's looking a little more bullish. I do see, just like straight off the bat, looking at this chart, we do have a resistance area. This is just like something more obvious that I see, like a lot of bounces here, right there, came up to this area, pushed away. Of course, I do my levels on the weekly chart, but this is something where you may likely see a whole support resistance anyways. So it's always really good to just see, hey, visually, do I see something really obvious? And then like if you kind of zoom into the area, it's going to tell you where price is headed to. So what we can see here is that we had a lot of rejections up there. So whatever it is, even if this blue level wasn't there, it's still showing us that price is failing. Like, it failed a couple times, came up, did a whole fake out, couldn't continue higher. That's a sign that price is weak there. So if we can't even get a really strong breakout and a continuation, it's a weak area. There's more bearish movement. You can see a huge sell-off on this day. So price basically reversed in this area. Now down here, we see that price broke this level. So this is like a short-term support resistance. Either ways, we always want to understand, hey, oh look, if you look all the way here, it's kind of just in the area. It's not always the most accurate, but you can see that there's been rejections here. Price basically came down and retested the whole area. It came close to this other support resistance. So every level you look at, if price rejects it that day, there's always like some area that may have previously rejected from. So it's always good to just understand that going ahead into the day, because whatever level you see, whether you see a reversal at a certain point in the day, that could be the point where previously it reversed there as well. So if you know that ahead of time, then when you're trading, you know, okay, I'm expecting some kind of maybe reversal. Okay, after the reversal, do I see any confirmation that price is actually pushing through? And that could be a strategy on its own. And then from there, you know, there's all this intricate stuff. But this is what we do to prepare for the day, so that we know, hey, there are certain levels. Where's price going? Price is retesting an area. Price is showing continued strength. Hey, I want to trade puts. I want to see that, okay, if price is showing bearishness, it just rejected resistance. Maybe after it breaks, I don't know, pre-market low, like pretend, yeah, pre-market low's there. Hey, if it breaks that level, for this Monday, I'm going to be bearish below that level. And then all I have to do, wait for price to break. Then I look for an entry for puts, you know, so that's another strategy. But this is what you want to do. When you prepare for any day, when you prepare any kind of ticker, whichever ticker you like, it could be a ton of different ones, but, or maybe you trade a different market. Whatever the case, when you're preparing for the week, you always want to gauge like, where could price be going? If it goes up, what does that mean? If it goes down, what does that mean? Do I need a certain level to break? Sometimes you don't need a level to break in order to trade. Every day when you prepare for the market open, it's going to be a whole new analysis, because based on the previous day, that could have just changed the whole trend. Now, based on a previous movement, price changed to bullishness or it changed to bearishness. So then your whole analysis has to be done again, because you need to see, oh, is there a new level created? Do I need to, you know, reevaluate certain levels? Do I need to delete levels? Maybe a level doesn't need to be there anymore. So all of this stuff is going to help you in order to prepare for the day, because you know exactly what levels to look out for. You know your bias, and based on your bias, you're only going to trade a certain way, because that's what means a higher probability setup for you.